Hello, Crowne here, your mortgage consultant for life. Welcome to this week's Mortgage Moments video. Here's a different but true take on money. Money is just like rabbits. It loves to multiply. It hops around and explores and experiments and tries and fails, and well, it finds a way to multiply time after time. Sometimes it does a spectacularly bad job of it. We only need to look back at the run-up to 2008 to see that in big, bold letters. Who in their right mind ever thought that a 100% stated income loan for a 4-unit investment property for a first-time homebuyer who's a W-2 wage earner was a good idea? And yet, that was just rabbits being rabbits. So why am I telling you this? I'm sharing this insight because lending in the residential mortgage space is always changing. Sure, we went through the dark ages from 2008 to 2013 where money was frightened, hiding in its rabbit hole, shivering and scared. Those were times when it was really, really hard to be a home buyer and even harder to be an investor unless you were sitting on a great big pile of cash. All of the lenders who offered alternative financing options vanished. So if you didn't fit the profile for traditional mortgages, Fannie Mae and FHA and the others, you simply weren't buying a home. But rabbits are rabbits and money is money. And in the last several years, money has been slowly hopping back into the market, offering some creative but safe alternatives to financing. Today, I want to talk about one of the unique financing solutions that has come into the market just for real estate investors to provide another way for them to purchase 1 to 4 unit investment properties. It helps to have a comparison point so that let me set the stage by talking about how Fannie Mae and Freddie Mac, the two conventional lending options available to investors, look at underwriting investment property loans. Here's a recent loan file for an investor who owns several rental properties. It's jammed with tax returns and leases and income documentation and bank statements and, well, the list goes on and on. The rules for calculating what investment properties make for qualifying purposes are severe and extremely limiting, and it leaves a lot of investors stranded without financing options pretty early in their investing careers. But here's the rabbit part. Alternative lending, they call it non-QM or non-qualified mortgages, has emerged and offers some investor-friendly products that are faster, offer higher loan-to-value options, and reduce the amount of documentation needed, and make possible what conventional financing says no to. It's a perfect example of how money finds a way to make money in a segment of the market that is clamoring for help. I need to share that these loans aren't the awful, risky, predatory, subprime loans of yesteryear. They aren't. They are only available to investors with at least 2 years of landlord experience. They require real skin in the game in the form of down payment or equity. And here's the important part. The money comes from hedge funds and private sources, so it doesn't jeopardize our banking system. I want to highlight just one of the products that many of my investor clients harness to finance their properties to illustrate how money is finding new ways to make money. This product is called the Investor Cash Flow Mortgage, and it offers them the option of financing up to 85% of the value of a property without looking at tax returns or employment or any of the other investment properties that an investor owns. Instead, the lender only uses the rental income from the property being financed, and as long as that income is equal to or greater than the new mortgage payment, the loan is approved. That's the wisdom and the sensible foundation for this new loan product. If the property has enough cash flow to support the mortgage payment, it actually does make financial sense, both for the lender and for the investor. It's easy, it's fast, and it's safe. Yes, they have higher interest rates to compensate for the additional risk that the lender is taking on. And that is one of the factors that we weigh when deciding whether to use this tool. Here's your takeaway from today's video. Your mission in life is to train your rabbits. That is, to make your money multiply. Start, middle, end. Harnessing the power of alternative lending resources is one of the ways, as a real estate investor, for you to get a jump on your investing career and hop your way to a happy ending. Well, that's it for this week. Thanks for watching, and remember always that I'm here every day to help solve problems that living life on life's terms sends your way. Keep my number close by so that you can reach me anytime you need my help, or anytime someone you care about needs someone who will care about them as much as I care about you. See you next week.